Hi, everyone, and Happy New Year. Welcome to our 2026 market outlook. There's a lot happening in the markets this year, and I want to break down what it means for you and the expectations for 2026. So, I'm going to do a brief 30,000 foot view of what 2026 might look like. Let's start with the big picture and growth outlook. Global gross domestic product is expected to grow about 2.8%, which is slightly above the consensus. So, a quick reminder, GDP basically measures the size and health of a country's economy. The US has a projected growth of 2.6, which is supported by tax cuts, easier financial conditions, and reduced tariff drag. China is forecast at about 4.8%, which is driven by manufacturing and exports, while Europe should see modest growth of about 1.3%, helped by fiscal stimulus and strong consumer spending. What this means is that we're still seeing growth both domestically and internationally. In public markets, we expect greater equity dispersion, which means some sectors and regions will outperform while others lag. Having global diversification and a blend of fundamental and quantitative strategies can help capture these opportunities. On the fixed income side, we see attractive income opportunities in securitized credit, high yield, and emerging market debt. Private markets remain important. We're watching private equity valuations, pressure points in private credit, and potential rebounds in both real estate and infrastructure beyond AI. Megatrends continue to evolve: energy independence, resource scarcity, and efficiency, all amplified by AI. And sustainable investing is maturing, with sharper focus on performance alongside their impact. Elections are front and center this year. Reminder, the news outlets make money off of ratings, and fear sells. So if you can, turn off your TV. But in any case, remember that historically election years bring volatility. But markets tend to refocus on fundamentals like earnings and growth. Staying invested is key. Inflation is moderating towards the central bank's targets, and policy rates are expected to decline in most developed markets. In the US, the Fed could cut rates by about 50 basis points, which means a favorable environment for both equities and fixed income. Corporate earnings are expected to rebound as inflation cools, and gains in productivity still support profitability. Job growth remains weak due to slower immigration and a slower labor force expansion. And while AI is still making headlines, its biggest productivity benefits are still a few years away. Of course, risks still remain. Geopolitical tension, interest rate uncertainty, and slower consumer spending could result in short-term volatility. China's trade surplus may also pressure European exporters, which is why diversification across regions, sectors, and asset classes matters more than ever. 2026 will require an active, disciplined approach. With central bank policy shifts, new trade dynamics, and AI innovations are reshaping the investment landscape. Active management is key to navigating these changes and positioning portfolios for success. For some of you, this year will be about rebalancing and recalibration. Active management, enhanced passive allocations, tail risk hedging, and broader access to alternatives can help strengthen portfolios against volatility while unlocking new sources of return. So what does all of this mean for you? It means to expect volatility this year. We know it, we expect it, and we've planned for it. Remember that your portfolio has been built with a purpose, and we're ready for whatever comes our way. In addition, there's going to be some good opportunities this year. So if we haven't spoken about your portfolio recently, let's chat. So to summarize, We're expecting a year with volatility and opportunity, but with an overall upward trend. If you have questions about the topics I covered today or would like to go into more detail, you can give me a call at 949-226-6222, extension 146, or email me at gmoulton@pfria.com. As always, I'm here to help you navigate your financial future with confidence. I'm also here for your family and friends. If someone in your life you know that could believe and benefit from speaking with a financial professional, please feel free to forward this video to them and encourage them to reach out. My team and I are ready to help. So if there's anything else I can do for you, please let me know. Thank you so much for your trust and confidence in me, and I look forward to a productive 2026.